Welcome to the Algo Factory beginner course, which is also available not only for our private members over on Telegram, but also for everybody out there in YouTube land. So, this is an opportunity to gather information for people who are either new to trading or interested in expanding their knowledge. And what you can do, of course, is if you like what we're talking about here, you can head over to www.algofactory.tech. Take a look at our website. We offer a ton for $49.99. I mean, what we're offering at $49.99 is worth at other places similar to us, probably lesser than us, for over $300. So we're doing this because learning to trade and building algorithms is a sprint. I'm sorry, it's a marathon and not a sprint. Okay. Now, when you hear the term algorithm, don't get scared. Algorithm is a very simple thing. Tying your shoes is an algorithm. Driving to the store is an algorithm. It just means that basically conditions line up and you make a decision. And anybody who trades successfully is most likely trading an algorithm. In fact, I would say almost definitely trading an algorithm. So the gorilla is MIA. I can't remember if you went on a vacation starting today or is that like next week? That I cannot remember. But either way, he's just not with us yet. He may show up a little bit later. We'll see about that. So taking a look here, we got some comments already coming in the private group. So we got a good question from Truckface, which I think is a good question for the beginner class. Can we go over quote unquote support equals resistance, please? Sure. And then we have Annie. Good morning, Annie. Annie Snappin' Annie. Been around for a while over at our fun friends over at Rogue. Okay, well, I don't see any questions yet in the YouTube chat, the YouTubes. So I'm going to go ahead and start bringing up charts. We're going to talk about support and resistance. Give me one moment to share the screen. Okay. And let me zoom in on the screen. Make it easier for everybody to see. So support and resistance, this is a market concept which is pretty valuable. It's something that you could say that it's part of the algorithm, of my algorithm. You could also say that it's kind of a filter. So I don't trade against support and resistance. In fact, when it comes to support and resistance, I've kind of taken to just calling it market structure. Because really, whether a piece of market structure is support or resistance depends on what side of it you're on. Okay, so to get into what that looks like, we have pivot points, and pivot points are where such things are created. Okay. So I'm going to zoom out here, and a pivot point is going to be where price was going in one direction and it changes direction. So we'll go to this example over here where price was heading up, and in a very clear way, it changes direction. And then it does so, it does so again here. And then it does again here. And then it was going there and there and then here. And so these are pivot points. All these areas where price changes direction. Let's get out the this guy here. So there, here, there, here, there. Okay. So those are all pivot points, and where that happens, what that means is that in the market, you have this concept of the bears and the bulls. Yeah, that's a head and shoulders, Annie. That's a nice one. Sorry, Truckface, identifying that head and shoulders. So yeah, that's another concept we can talk about, but maybe once we're done with the market structure, support and resistance conversation, we can talk about that. So in this case, we have support and resistance, and what that means is as price pivots at those points, you're going to have sort of these places where the bulls and the bears kind of get in a fight, and the bulls want price to go up, the bears want price to go down, and at a certain point one of them takes over. So for example, on this area here, as price was heading up, the bulls were in control, and then right here at this pivot point on the top of that little hill there, right where I drew this line, the bears took over, right? And then price started heading down, and that's where price pivoted. Okay, the bulls got tired, the bears started to kick in, if you will, and then where that happened, there's a lot of like, well, just beyond that is a lack of volume, and usually where that happens, there's going to be a little bit more volume. And so let's say, for example, you're just a guy who's trading, and what you're looking at now is the EUR USD. So this is the euro versus the dollar, right? The euro in terms of dollars. So at this point, where the arrow is pointing, the euro was worth $1.16 pretty much, right? And let's just say you bought there. You went ahead and said, okay, I'm going to invest in the euro versus the dollar at $1.16, right? And then you put, I don't know, let's just say a few $1,000s on there. I don't know, 10,000, 5,000, whatever your number is. And then when you do that, then you get this rise of $1.16 up to, and this is a 3-day chart. So each one of these price bars is worth 3 days of price action. So you're going from like early November until January. So this is almost like a month, 2 months, like say just over a month of price action. And just over a month, you get price that went up from $1.16 to $1.23. So that's going to be roughly 5% increase, right? So if you put, say, maybe $10,000, now it's been about a month, and you now have $10,500, nice $500 take, and you decide that, okay, I'm good at 5% for whatever reason, maybe to do with some past structure, but whatever the reason, you take your profit. So profit taken at $1.23, 5% gain. Okay, so that's a nice haul. So that's a lot of pips. From, if you know what pips are, there's a great resource here. See if I can verify babypips.com, I think it's called. So babypips.com, I'm just making sure I've got the right website on that. And babypips.com is a good free resource if you're really trying to get to know the Forex market. Of course, if you're over at Forex Factory, you can simply just ask us questions. That's an option. But, we may direct you either to, I usually will try to find, either I'll answer the question myself, or I will refer to, here's a good video for that where somebody answers it really well. But here's babypips.com, and that's a great free resource. I put the link in the YouTube chat. Okay. So also, before we get too far, what I'm going to do is spread the YouTube, and let's see here. I'm going to spread that over to, it looks like the Gorilla's on the way, folks, by the way. The Gorilla was indisposed. All right. So let's see here. Get shareable link. I'm going to send the YouTube link to some of our people here. So give me just a moment, and then we'll get back into the structure discussion. So let's see here. The session is live. Okay, so all right, so we got Baby Pips. Like I said, if you're not in Algo Factory, or even if you are, Baby Pips is going to be a very thorough discussion around Forex, how pips work, things like that. So, because we didn't get into trading Forex, like what's a pip and how do I trade it? And, those are things that could be easily answered there. You could always, like I said, come to algofactory.tech and talk to us there. But in this case, you have this pivot point, right? So that's what happened. So we know that people took profit there, right? And knowing that, what you're going to have is, okay, so there's a group of people who see price head back down to where, why can I not delete this? Okay. You see a group of people who saw price head down to this prior pivot point. And people know that price action happens at pivot points, right? So there's this pivot point down below. And so it could be like, well, that guy that bought down here originally and sold way up here, right? Well, that guy's like, yeah, that was a good place to buy. And I took my profit, so I'm going to buy there again. I won last time and everybody else was buying there and there's a lot of structure there. So I'm going to buy there again. And so they do. And then price heads back up and they head back up towards that, that same place where they took profit last time. And they say, hey, you know what? That was a great place to take profit last time and price flipped over right there. So I'm going to sell before it even gets there. And then of course that there's another sell right there that happens, right? It could also be, there's another group of people, right? And those people got excited and they thought price was going to go up higher. So they bought right here. They went long and then they ended up losing about 5%. And then price is heading back up and they're like, you know what? We're almost to break even and it looks like price is going to turn around. So I'm going to cut my losses. I'm going to have a very small loss. And then they sell right up here. So you got people who are basically greed and fear are the two things that are going to create those pivot points, if you take my meaning. In fact, greed and fear run the market. Okay. So that's why structure exists. And over at Algo Factory, we have a few tools that we use to kind of analyze that market structure, analyze the, these moves to find out where they might retrace, things like that. There is a particular indicator that I'm not going to mention here that I use to determine where a lot of the volume is and where a lot of the pivot points might happen, where price is going to be attracted to. Again, that's over at Algo Factory. It works like a charm, and it's the same thing that I do almost every time in a situation like this where I want to find out where price is going to go or where it may or may not go. So that's that. Let me respond to the gorilla. And there you go. Okay, so he'll be on any minute. That's fine. So now that hopefully explains market structure. So, just to kind of take a look at it from a long point of view. So this is going back to like 2015, right? This is a 3-day chart. So like I said before, each one of these bars right there, each one of these candles, I should say, is 3 days worth of price action. So you're really going back into time here. But even such old market structure matters because look, you got these 3 pivot points right here, right? And those create structure where you could actually draw a line down at the bottom of those, right? More or less. And you can see that the market actually bounced more, it didn't quite make it down to the structure, but as it approached that structure right here, you can see that that pivot actually happened. The market anticipated this structure, and even some of those bounces were like a little bit higher. You got a lot of action that's actually right here if you look. So you got just to line that out, you got this pivot here, this bit of pivot here, this pivot here. So there's a lot of price action happening, and I know people who wisely will draw their structure not as a line. They'll actually draw it sometimes as a rectangle because all of the different price action that happened in there. And so they'll say, okay, price will, as price is headed down here, it will at any point in this block, and I'll do this too under certain circumstances, under actually most circumstances, they know that as price enters this area where I've drawn that block, that's going to be a support, right? So, that's how price is bouncing off while going down. Now, a resistance is another form of structure, And that happens to be where price actually kind of made a top. So a support is going to be at the bottom, which is also known as a demand zone, right? Because this is a supply and demand concept. Some people don't like to apply that to the Forex market. I get it. However, technically, it's not illegitimate to apply supply and demand to the Forex market. I think it's, of course, better applied to something like equities that have a scarcity to them, because, of course, money is just, now it's printed out of thin air, but they can only really print so much. There is a limitation to it, so technically there is a supply and demand, but that's getting a little bit academic. So to keep it not in the weeds, I'll just go ahead and make this real simple, and I'm going to type in support / or another word for that is demand zone. Okay. So that's I like the term demand zone. My background is economics. Supply and demand are concepts with which I am familiar ad nauseum. So that's that, right? Support or demand zone. And then you have up top a supply zone, which is going to be a resistance. Okay. So let's type that out. Resistance / supply zone. Okay. So now what does that mean? Well, from a market standpoint, from an economic standpoint, as price is going down, okay, this is in the euros. So when price is low, people want something because then they think it's going to go up, right? So people want to get a deal on something, right? And as price on the euro goes down to this area, people have in the past wanted to purchase it, right? So, for example, right now, let's find my arrows here. So price here was in demand. Price there was in demand. People bought it in this area, right? And then as price approached this area up here, people felt that the supply was too great, and so they sold, right? So the demand was no longer there. The supply was too high. And in economics, it's supply and demand, right? If you on your Econ 101, you can take it back to high school. Look, interesting. So I'm going to take a break from supply and demand. Look at what Nana Knows Shift is someone over in our YouTube who is talking and says, I have absolutely no idea how I ended up here, but I was just explaining the stock market to my son yesterday. I used the greed and fear statement too. I'm going to find out more and keep listening. Nana, awesome. I'm glad that you're with us. Look, just to give you a brief history, I have been trading, and since 2017, I've been actively technically trading Forex. I traded precious metals in a small degree back in the early 2000s, the early 2010s on margin. I have family in that business, and I made some good money doing that. But I really got into trading in 2017, and I haven't needed a job since. So, this is something that I'm not always recommending that anybody quit their job to start trading. That's not necessarily a really good idea. In fact, on this channel, anything that we say is for entertainment and educational purposes only. Of course, you're going to want to do your own research before you risk your money on markets, because you can lose money. It's a risky thing. However, once you have consulted a licensed professional and made all your own decisions based on your own research, we do have some information here that could be very valuable. Obviously, if you understand fear and greed, then you are ahead of the game, because this is part of trading psychology. And if you go over to www.algofactory.tech, which the link is here in the in the in the chat box, we have 4 classes in there. The first class is going to be the Essentials course, which is basically kind of a beginner's course. And then we have a building algorithms. And like I said before, an algorithm is merely just a process by which you trade. Any trading plan that you follow every time is going to be an algorithm. So don't get scared by the word algorithm. It's just anybody who's trades successfully is using one, whether they know it or not. And then we have it's called the operations course, and it's where you learn to treat your trading like a business. And that is key. And then there is the trading psychology. And that's where fear and greed come into play. So the fear and greed is really key. So I'm glad you said that, and welcome to the family, hopefully soon. Okay, so back to the lesson at hand. So we have this, we were talking about resistance and supply and demand. And so we know that in the past, as the euro got down to about $1, close to parity, if you will, anytime the euro got close to $1's worth, like $1, or say €1 worth $1, it's actually $1.03 in this case, anywhere from $1.03 to $1.05, that's where the euro became in demand and people bought it. And as the euro approached $1.25, that's when people wanted to sell. So at a 25% gain, but you're talking about a gain that happened over a few years, right? So from, let's say, 2017 to 2018, or if you bought back in 2015, you had to wait a few more years, but there were areas to sell in between that. All right, so here, as price headed back down to that low dollar, say $1.06 area, it became in demand again. Greed kicked in, right? So as greed kicked in, people bought because it became in demand again. And then it quickly went back up to the zone where people sold before. And people are looking at the past and they're saying, oh, well, everybody sold at $1.25, or those who were actually involved in the trade sold at $1.25, right? And so fear kicked in because like, oh, I'm going to lose money here. I need to take profit. Or let's just say greed kicked in, and that's where people went ahead and took profit either way. And then, of course, price headed back down. And then once it got back down towards parity, you have a bounce that happened right here, which this line doesn't mean anything anymore. So price actually now, because of economic conditions and some very, very severe, geopolitics and stuff, price went ahead and broke below parity, which is the first time it's happened in the history of since before, like, say, 2003. So that's supply and demand. So that's a pretty good lesson, I think, in supply and demand. And I'm glad we have Nana here. I'm glad that you made it to our channel, and you don't know how you made it, but that's good. That means maybe the algos are helping us out.
I have no idea.
We got the gorilla in the house. V, go ahead and say hello to us, and I know you're kind of late. We talked about supply and demand, support and resistance, and the reality is it's all market structure. So just to end this discussion, if you have price going up and down, and then we're gonna let the gorilla say hello real quick after that. But I want to do this for continuity here.
Yeah, do you think, man?
As price goes up and down, like this, so support becomes resistance. Okay, so and vice versa. So for example, right at the top where this price first moved down, right, this kind of area right here, this was a resistance, right? So we have a pivot point right here, and let's make this kind of more demonstrative. Let's make this a little better. So as price was heading up in this scenario, there was a pivot point right here, and that created a resistance, right? But as price broke through right here, that was a resistance, but price broke past it, and then this same area that was a resistance became a support, and price bounced off that support right here and again here. Now when price broke back below that area, it became a resistance once again. So it's all just market structure, and that's the whole point. That should be the Truck Face's original question: support equaling resistance. So for the rest of the beginner show, I'm going to yield the floor to the gorilla and let him tell us what happened. I think he had too many bananas last night. What happened?
It was a rough night. I was hanging out with the chimps, and you know how it is with the chimps and the orangutans. They're knocking down banana daiquiris, and I just couldn't hang it, man. I just.
Hey, how do you say banana daiquiri? Banana daiquiri. That's Godfather 2.
Oh, really?
Yeah, they're down in Cuba.
That's right. That's right.
Fredo says, "Hey, how do you say banana daiquiri?" And he goes, "Banana daiquiri."
That's right. That's one of the scenes I missed. I overslept. overslept my alarm. Had a very late night last night working. Trying to just cram everything what I need to cram, all the big important stuff before I leave. And I'm usually up by 6, so I set the alarm for 7. I'm like, I wake up an hour, give myself some grace. Wake up an hour later at 7 a.m. 7 a.m. comes by. I don't know what happened, man. My hand went over to my phone, shut it off, and turned around like I was going to get up in 10 minutes. And next thing you know, I wake up. It's like 8:30, 8:40 something. And I'm like, oh,
Yeah,
shit.
you just needed some sleep, man. You gotta take it easy. You're gonna take a vacation here next week, aren't you?
Yeah, I'm leaving today. I will be in SoCal for the next 8 days.
Damn, dude, I lived in SoCal my whole life, and you never come out there. And then the minute I move out of the state,
I told my wife,
twice a year.
Cowboys gone. Now's their chance.
Cowboys taking up all the women out there. No, just kidding. We're both married. We don't mess around. So we did have also during this whole thing. Who is this? Is it Annie or is it Truckface? I think it's Annie. Who identified Head and Shoulders also. So real quick before we leave YouTube, go over to the paid chat. Just a quick reminder. Go over to, where is it? AlgoFactory.tech. I put the link right here on the screen there. So AlgoFactory.tech. And again, we are at a very, very low price. Price is going to go up. We're at $49.99 a month right now. We're going to teach everything. And again, that's all education, entertainment, not investment advice. We're going to teach you the basics of trading, or at least give you a place to start with that. We have a community that's 24/7. Well, we're in there all the time, except for when the gorilla has had too many banana daiquiris. But we're in there all the time. I mean, you'll see me in there at midnight answering questions. I put trades in there. I put my own trades in there. So usually we get at least a trade or two a week in there, if not more. And there's swing trades. Trades I put in there are like, it's like, it's not something you got to be sitting in front of the computer to get, right? And the whole concept here is that people usually have like a job, and so they can't sit in front of the computer all day. So I've developed this course around people who may have that setup where they can't just be in front of the computer all day, but they want to learn how to trade. There's a whole university. There's a pretty comprehensive university. Like we talked about, you got a beginner course, you got algorithm building course, you have the treating a trade like a business course called operations, you have the ethos course, which is a trading psychology course. So we hope to see you over there. Real quick, Annie identified a Head and Shoulders, and Head and Shoulders, depending on which asset you're trading, has a pretty high rate of success when it comes to trading. Like whenever you take a trade on a Head and Shoulders, I think the hit rate can be as high as like the high 80 percentile, which is massive. Anytime you have a high 80 percentile, like you're, that means 8 out of 10 times or better, you're winning your trade. So that's the Head and Shoulders. And this is really nice Head and Shoulders because the neckline has a positive slope. What that means is that the neckline is sloping upwards. So this bottom here is going in the upward direction. Now, when you take profit on a Head and Shoulders, it's going to be based on a Fibonacci extension. And so your profit is going to be down in this area. Now, I teach all this in the class, which is why I'm not really going over it right now. If you go over to algofactory.tech, you will find that there's an entire class on this. But because the neckline is up, before it's like giving you more room to go down to your targets. If the neckline was flat, then you would have to enter your trade. Where's my arrows? You'd have to enter your trade. Well, I like this arrow right here. The trade would go like right here, right? Now you're really, and the neckline is sloped, you're going to enter right here. So you have a lot more room to head down to your profits, right? From here to there. But if you are entering the trade down here, then you only have from there to there to go to your profits. So that's a beautiful Head and Shoulders. Of course, you're going to have to watch that thing build from, you're going to notice it happening probably 25th of May, and then you're going to enter it sometime in July of the following month. So that's a pretty high time frame trade. Of course, this is, high time frame analysis, and that's a great way to trade. A lot of people make money that way, so that's certainly a trade you can take while having a job, because you can set your orders and like 4 days later, 5 days later, it's going to hit. It's not like you need to be sitting in front of the computer for that. And GG, and I'm only assuming it's GG and not Gigi, but
It's GG.
is it GG over in our
That'd be
private
funny.
group? Is
Call me Gigi.
Yeah, Gigi. Yeah, it doesn't sound quite right. Over in the private chat is thanking us for accommodating the working peeps. So we're gonna hop off YouTube. Gorilla, give us that all too famous send off.
My Tarzan thing.
That's okay. You know what my kid's favorite animal is right now?
Don't tell me it's a gorilla.
It's a gorilla.
That's hilarious.
It is. We have a book called The Little Gorilla, and
That's
as we're
funny.
feeding him at the table, after a while he gets bored. Like he's like me. He needs constant mental stimulation. And so he gets bored after halfway through his meal. So either I got to sing Old MacDonald Has a Farm, and as I do that, he'll start doing this to me. He goes, and he wants me to recite his favorite book, The Little Gorilla.
That's adorable.
Yeah, I'll get it on video. I'll fire it off to you at some point. So, all right. Well, that was fun. We're going to hop off of YouTube. Thank you all for joining us. And Nana, we're so happy to have you here. I think you're the first person who's wandered onto our channel randomly. So we hope to see more.
That's awesome. Yeah, please join us over at the algofactory.tech. I mean, we give you the rudiments. We give you the tools. Learn through immersion, through the labs, and be a part of the group and the community.
It's not a get rich quick. This is something that you're going to have to put some dedication in. Anybody who tells you, follow my system and you'll make $1 million, high probability that's not going to work out for you. Yeah, even if they're trading their system and it's a good system, there's a high probability you're going to fail. That's just a trading psychology issue. And there's a high probability there's a scam. That happens too. So
learn these easy steps to trade and you will win
one
every
simple
market.
Trick.
3 steps: the hook, the boot, and the knife. Learn those things. What?
The snake, the cat, the rat, the dog. How you gonna see when you live in the fog?
DMX right there.
That's right.
All right. R.I.P. DMX.
All right, everybody. We'll see you on Mondays. I guess it'll be just me next week. No Gorilla for the week.
Yeah, I think it'll be you. I will try to chime in when I can. I'll be around. You'll be around. Yeah, I'll be around.
All right, cool.
There, but I'll be there.
Look at that. That's some dedication, man. The Gorilla takes his occasional vacation, and he's gonna chime in like Walden.
Whenever you want me, I'll be there. I'll be around.
We're still bad at singing right now.
Terrible.
All right, everybody.